Tesla is already number one worldwide in terms of EV sales, not just here in the United States, but worldwide. They have 17% of the market share. There was nothing where they said we plan to hit X number of vehicles by 2025, 2027, 2030, or this is what the cost will do.
Well, they've indicated they're going to be able to manufacture one for half the cost of the Model 3. So that tells you what price they should be able to charge profitably on the next-gen vehicle.
It was very aspirational, but it was really short on detail. And I think that's what you're seeing with today's move.
Investors were left pretty unimpressed by Elon Musk and company at its investor day.
They laid out the foundation to drive costs down 30, 40, 50%. And that's going to ultimately enable them to have a lower price vehicle.
Essentially, what you had is you have a bunch of fanboys and Tesla cheerleaders like Pierre that are writing checks that they can't cash.
In this video, I'm not sure if it's sad, hilarious, or both. But we're looking at some of the mixed reactions to Tesla's Investor Day 2023. Disappointing some, impressing others, confusing many more, and possibly separating those with a very short-term horizon from those with a long-term perspective. We have comments from ARK Invest, the class clown, many talking heads in the mainstream finance media, Gary Black, please come back to Twitter soon, and plenty more. P.S. Submissions are now open for the next exclusive Patreon Q&A. If you're a member, you know where to submit your questions, and if not, you can join with the card in the corner or the link in the pinned comment. Get your questions in now. Submissions won't be open for long. First, we'll be hearing from ARK Invest, who for some strange reason kind of seemed to understand what they saw at Tesla Investor Day and the long-term implications.
I think it's clear that Tesla is executing on its ambition to scale to 20 million vehicles, which really ties in with our expectations for the company's ability to deliver growth. If I were in another auto company, I would be tearing my hair out at how quickly they are innovating on the production, design, and manufacture of these vehicles. So they announced a number of what a casual observer might think of as incremental manufacturing advances, but those stack up to more efficient vehicles that are cheaper to produce, that are better end products for consumers, and indicate to us that they're going to be able to deliver lower cost of production vehicles that are more performant than their competitors. And so on the manufacturing and margin side, I think it's actually quite a positive set of advances that they laid out, and relative to an auto industry that's usually on a 4-year innovation cycle, it really wrong-foots their competitors.
What do you make of the criticism that they didn't unveil a next-gen vehicle? I mean, were you expecting that? No talk really of timeline, of price.
Yeah, I mean, well, they've indicated they're going to be able to manufacture one for half the cost of the Model 3. So that tells you what price they should be able to charge profitably on the next-gen vehicle.
But Brett, there was no picture. There was no picture of the vehicle.
And they may accept a lower gross margin on that car conditional on them delivering on robotaxi. As in, if you can generate essentially software margin after delivery of vehicle revenue against the vehicle, you don't care that much what the cost of the razor blade handle is, because you're selling razors. And they did, clearly indicated that they're going to have some kind of van that's built on the Cybertruck platform based on their visuals, as well as that next gen vehicle. So in some ways, they actually did. They indicated that there are two vehicles in pipeline rather than one. So that was slightly surprising.
But Brett, they didn't tell us that with the words. We have to think and figure that out ourselves. Brett, that's not fair. Why didn't they tell us everything with words?
And I can understand that they want the next-gen vehicle reveal event to be something more targeted at their customers rather than their investors. So from a marketing and PR maximization perspective, you want that event to be exciting and for the people that are going to buy the car, not necessarily for the people that are going to buy the stock. This is a vehicle that they think is going to scale to multiple millions of units production worldwide, and it deserves its own spotlight and reveal.
Now, I hate to point out the obvious here, but I have to. Apparently it's not as obvious as I thought. But let's think here, ladies and gentlemen. How would it serve Tesla at their investor day, not their customer day, their investor day? How would it serve Tesla to unveil the form, to show visually what their next-gen, more affordable vehicle will be? You know how it would serve Tesla? To fuck them in the face. Why? Because a bunch of consumers would then see this thing and go everywhere in the media. Oh my God, Tesla's new vehicle, $25,000, looks cool, yeah. Guess what happens to all the people that are currently thinking about or already have reserved and or purchased a Model Y or Model 3? What do you think they do? oh, do I really need to spend that much? You know what, maybe I'll wait for the next one. It's probably going to be just as good and half the price. I talked about this prior to the event. It's very dangerous for Tesla to announce this thing as a consumer purchasable vehicle. I thought maybe they'd describe it solely as a robotaxi platform for now. But Brett makes a very important point here. I don't know what the investors were thinking or expecting. How would it make any sense for Tesla to unveil the form factor of this thing if they can't make them yet? What does that do to order flow for the Model 3 and Y over the next couple of years? It's insane. I've talked about this in the past. Tesla wants the gap between visually unveiling this thing and first deliveries to be as short as possible. Tesla was strategically brilliant at this event. It'd be insane to show what the thing looks like. Instead, they showed us everything that actually matters from an investor's point of view. How do they make these? How much will it cost to make? That's what they went through. I kind of thought this stuff would go without saying, but yeah, apparently not.
I was taking a look at some of the tweets that you put out right after that Investor Day, and you mentioned Tesla's design engineering integration parallels Apple's approach and is critically important during technology transitions. Can you elaborate a little bit?
Yeah, so if as the technological frontier is pushing forward, if you are relying on a supply chain to provide you with kind of the critical component, then you're going to be held back at the velocity of your competitors. And so by vertically integrating through all the critical components, Tesla has never held back to the competitors. They're always pushing kind of their entire kind of technology stack forward cohesively. And so just like Apple, Tesla is now hit a point where they are setting the standard for the industry, and competitors are then going to have to re-engineer to accommodate the new standard that they set. So it's an esoteric change, but they are going to 48 volts on their vehicle. This allows them to reduce by 4 times the amount of copper wiring in the vehicle harness. So it lowers the weight, makes the vehicle less expensive to manufacture. And they clearly have been working on this, and they have the electronic components to be able to do it. Now, the entire rest of the auto industry is going to have to turn around and try to figure out how to accommodate that, or else they're going to be cost uncompetitive. And so I think it's true across a number of different areas, on the full body casting, on the kind of modular production that they talk about, that they really are iterating on the machine that builds the machine, while other companies are traditional automakers are just trying to figure out how to build an electric vehicle that's cost competitive at all. And so it really wrong foots the competition and allows them to set the direction of travel for the entire industry.
Brett's right. Tesla is so far ahead, they're pushing their technology so much, they're innovating so much, that they are dictating terms for the entire automotive industry. Copy, align, conform, or perish.
There were so many sort of areas that they touched during Investor Day. The new plant in Monterrey, Mexico, also their manufacturing plants, reducing their footprint, something that you talked about earlier as well. The Cybertruck, which is expected in 2024. So if you take a look at the entire of everything of what was said, what do you think that excites you most about the future of Tesla?
Well, it's funny, they spent so much time on manufacturing scaling, because I think that's where the average sell side and analyst is focused. But the most critical financial thing for the company is whether or not they can deliver robotaxi. And I'm most excited about the fact that recent releases in the AI world have indicated that having proprietary data is even more of an advantage than we previously understood. So having access to a very large volume of vehicle data coming off the fleet, the vehicles drive 120 million miles a day, gives Tesla a unique data advantage to kind of continue to improve the full self-driving capability and eventually deliver a commercializable robotaxi service on a mass deployed vehicle that's already in the world. So our expectations are 2/3 of the 5-year forward value of the company is embedded in them delivering robotaxi. And so that's, it wasn't necessarily focused on because they just had an AI day, not that long ago, but it's actually most critical to the future financial prospects of the company.
Another excellent point, and I think Dave Lee summed this up best, paraphrasing here, but Dave was essentially suggesting that, well, if you don't believe that we're going to solve autonomy, that's fine. Here's an event showing that we'll completely and utterly dominate automotive. Whether or not we solve autonomy doesn't even matter. Here's the plan for us to absolutely dominate automotive. Half price, compelling electric vehicle. Here's the plan. So if you ignore autonomy, as many investors do, Tesla just laid out an incredibly compelling case as to why, at a market cap of of just over $500 billion today, still, in my opinion, the best risk-adjusted opportunity in the stock market. Owning Tesla stock is like having a call option, a never expiring call option on the successful deployment of autonomous robotaxis. There's so much intrinsic value within the company, irrespective of whether or not they even solve autonomy. But spoiler alert, they will solve autonomy. And this is a winner-takes-most opportunity.
Yes, it was a very interesting, very rich day, very rich in terms of learning. I think what Tesla did, really having us in Austin during a full day, visiting the factory and spending time with a dozen members of the management team to go over a lot of what the company is doing today, is giving us a lot of flesh, which stands behind what you just mentioned, which is a plan to support the transition to like an old renewable world and towards 20 million units, 20 million cars. So like 10 times more the run rate they could achieve with the factories they have today, and also towards producing 1 terawatt hours of energy storage capacity. And so to get there and to make money on the way, to remain very profitable, there is a lot to deliver. That's really getting into these details that Tesla did during that day. And I found the overall story very credible. What we saw is really what Tesla is capable of doing and what other car manufacturers are going to struggle with. That's their ability to innovate on the manufacturing front, on really all what makes a car, not only the battery, but also like the electric motor, the electronics inside the car, the manufacturing process, putting apart really the way cars are being manufactured today, to come up with significantly more efficient ways to do so.
Sure.
Compartmentalizing the manufacturing of the car. So that's really like in all these details, all that flesh that comes around the vision that the day was extremely useful for investors.
All right, so Pierre, that's the kind of bullish macro case here. Gordon Johnson, we know that you have not been the biggest fan of Tesla. In fact, you have a pretty dire outlook for the valuation of this company overall. The rest of Wall Street seems to be agreeing with you, at least in part, given the 5 to 6% drop in Tesla shares that we're watching right now on the heels of the investor day. So did anything happen yesterday to make you more bearish on Tesla, or are you a little bit more measured about it now?
Dom, thanks for having me. Pierre, good to see you. Let's talk specifics. So essentially what you had is you have a bunch of fanboys and Tesla cheerleaders like Pierre that are writing checks that they can't cash. And let me say specifically what I'm talking about. Headed into the much hyped investor day, Tesla talked about, or the fanboys talked about, either a new model being produced, that they were going to talk about the severely delayed Cybertruck, when that was going to come out. They were going to introduce a new affordable $25,000 car, or they were going to announce new things around robo-taxis, which Kathy Wood had talked about a lot. None of that happened. In fact, what happened was for 3 hours, Tesla spoke in vagaries, and you had a bunch of engineers come up and talk about things that Tesla has already done. And the CFO refused to talk about any numbers. In fact, he said he's not going to talk about Q1 and Q2. Why? Why is he not talking about that?
Now, this video is going to be far too long if I debunk every one of Gordon's crazy points, but I do just want to jump in here for a sec. Zach Kirkhorn actually did talk about numbers. Now, in terms of next quarter, I mean, bro, this was a long-term event. People don't seem to get this. Wall Street doesn't seem to get this. One of the most common criticisms, there were no targets, there were no milestones. They didn't tell us exactly how many vehicles are going to sell on this particular date. I don't understand. Many on Wall Street seem to have absolutely no perspective at all. Tesla described how they're going to drive the cost of their vehicles down by 50%. I mean, hello, this is how the S-curve adoption happens. This is how the S-curve ramp up to 20 million vehicles per year happens. It's cost. As Tesla points out, demand is quasi-infinite. It's just about affordability. Their goal is to drive the cost down. They just showed a plan to drive them down by 50%. It's clear as day. I mean, maybe it's just because I have a decade plus time horizon. My perspective, everything that I see, I'm like thinking, okay, 10 years into the future, right? Wall Street's thinking next quarter at most. I just still do not understand. What part of half price do people not understand? Zach did talk about numbers. Half price vehicles. We also saw Tesla's OPEX declines. Actual numbers. Stuff that matters to investors. Zach also disclosed more numbers. The fact that the cost to produce a Model 3 has fallen 30% since launching. Just a few years, they've driven the cost down by 30%, and the next-gen platform is going to be 50% cheaper than that. These are real numbers that really matter. These are most fundamental numbers for Tesla to get to 20 million vehicles per year. The fuck cares about next quarter? The fuck cares about what the margin will be next quarter? Zach gave other numbers. Tesla's SG&A 60 to 70% lower than other automotive manufacturers. These are things that actually matter. Their OPEX, their cost to produce vehicles, their efficiency. They also described exactly how much they've invested to date, $28 billion, and how much they'll need to invest as a company to get to their goal, an additional $150 to $175 billion. These are literally the most fundamental important numbers that Tesla could have disclosed. They talked about today, and they talked about the future. 50% cheaper vehicles, OPEX trending in the right direction, extremely capital efficient, demonstration, a 30% decline in the price of the Model 3 in the last few years, and then 50% cheaper for the next gen. I mean, these are the most important data points. What Wall Street wants is some pretty pictures along the way, along the journey. Please, Tesla, draw every little part of that S-curve. We don't understand. We can't understand the implications of half price. I've really been doing my best to understand Wall Street, and I really mean this. I had some interesting interactions with Gary Black, who will feature later in this video. I was trying to be as polite as possible. People are reading between the tea leaves, making the mistake of projecting my YouTube persona onto a different platform. I'm very polite in my one-on-one interactions with people. Still cannot understand the Wall Street analyst. Hello. Half price.
But that's not a demand analysis of automotive. You need to do an analysis. Where's your 69-page automotive demand report describing how much demand there'll be at that price point?
I've been trying. I just can't. I really can't. I'm doing my best to put myself in the shoes of a Wall Street analyst. And if I put myself in the shoes of the Wall Street analyst, with this information that Tesla has developed a new manufacturing process to literally halve the price of their vehicles, I have enough information to look at the automotive industry, average selling prices of vehicles, do some numbers, and fill in the blanks to join the dots. I've been trying to understand what would Wall Street have needed from Tesla. And I think I know, but apparently I don't, because when I asked, is this what you would need? No, that's not what I would need. I feel like I speak a different language to Wall Street analysts. I really am trying to understand their perspective. But at the same time, I cannot fathom what part of half price does Wall Street not understand? What additional dots need to be joined? How much more does Tesla need to hold their hand? If Tesla says, half price, compelling electric vehicle, your job as an investor, whether it's retail, whether you're an institutional investor, whether you're a Wall Street analyst, doesn't matter. Your job is to consider the implications. Okay, if so, then how many vehicles could Tesla potentially sell? You don't need Tesla to tell you. We've already got Tesla's long-term goal of 20 million vehicles sold in a single year. We've just heard they're going to halve the price of compelling electric vehicles with new manufacturing techniques, and they're going to scale as fast as possible. I don't understand why this is so difficult for Wall Street. I generally just don't understand. I'm trying to understand, but I just can't. It just doesn't compute. As I said yesterday, if Tesla unveiled plans for a $1 electric vehicle that was just as good as a 3 or Y, Wall Street would have the same concerns.
What? That doesn't tell us how they're going to sell 20 million vehicles per year. I don't understand.
Let's discuss that briefly. Thus far this year, fundamentally, it has been a horror show for Tesla. What do I mean? They've engaged in margin-slashing price cuts. In fact, they're offering cars in China now in the $30,000 range. And despite that fact, the first 8 weeks of the first quarter, if you look at their cars sold per day versus the first 8 weeks of the fourth quarter, it's down 20.1%. They are getting annihilated in China by the competition. And you're seeing the same thing in Europe, where their inventory is stacking up despite aggressive price cuts. Let's just think about this, Dom. Let's just talk about the numbers. They did about just under $10,000 per car in profit in the fourth quarter. They've cut prices by about $6,000 per car. So if you assume they get $1,000 per car of price savings and modest price hikes, you're talking about an EPS number, assuming they can sell 1.8 million cars this year,
right,
of under $3. That's a multiple of 70 times earnings in an industry that trades at 6 times. Right now, Tesla is valued at more than the next 6 largest automakers combined, despite selling just 4% of the cars that those automakers have sold on a trailing 12-month basis.
All right.
And when you consider all that, right, they're struggling to sell cars right now, massive price cuts, margins coming down significantly, and 2 of their plants are running at 20 to 40% utilization. This is a pending, we think, problem for Tesla.
Okay.
And to speak in vagaries, as I think Pierre did, and not focus on those facts, I think is why there's going to be some negative surprises later this year.
All right. Well, it's good to know that whatever happened yesterday hasn't changed either of your minds with regard to the bull-bear case on Tesla. We've got a limited amount of time left. And with that, I want to give each of you guys a kind of final word. All right. And perhaps, Pierre, we'll start with you. You know, Gordon makes some interesting points with regard to the valuation specifically. Is there anything that you can respond with regard to just how much Tesla is worth compared to what it's actually producing? Or is it all about the promise in the future, which are, by the way, vagaries by their very nature because it's a vision and not necessarily a hard forecast?
Thanks, Dom. Valuation is all about the future, right? No company is valued on past performance or what happened in the past. It's only valued on what's happening in the future. So here you're facing a choice. You can listen to like the story, the picture Gordon just painted, which is about a company that visibly barely knows how to make a car and how to sell a car and how to manage the transition of the world towards like a renewable economy. Or you can listen to what the company has set as a goal, which is 20 million units and a terawatt hours of energy storage capacity that they want to roll out ASAP. So what does Tesla look like with that kind of master plan being executed?
Sure.
That's $700 billion of revenues in autos, like $200-300 billion of revenues in energy storage. We're talking $1 trillion in revenues.
Fact check. True. Like really true. Pierre there, in case you missed it, Tesla will do $1 trillion plus of revenue, give or take, around the end of this decade. There aren't that many investors out there who believe this will come to pass. But believe me, it will.
It's a very high margin business. Right. Tesla has demonstrated they can do cars very efficiently and defend very, very good margins. So you're talking $200-300 billion of EBIT.
Fact check. Also true. Pierre, have you been copying my Tesla valuation model? I'm just kidding, by the way. Of course, Pierre's not copying my valuation model. He's got a big brain and a good team, and they're doing their own research. But funnily enough, they've come to a similar conclusion as this dumbass on the internet.
Which, for a company growing reasonably well, can trade on a 25 times maybe multiple. So we're talking $5 trillion of market cap.
Fact check. Also true. How do I know? I'm from the future, or I'm just hallucinating. But FYI, I do believe that it is inevitable at some point in the future, Tesla will far exceed a $5 trillion market cap.
But Tesla, why didn't you show a picture of the next generation vehicle? I'm disappointed.
On achieving that vision. So that leaves the stock with a lot of upside.
Okay.
And we know, let's see what happens in China in the next few months for Tesla and see how it stacks up against Gordon's perspective.
All right. So Gordon, with that being said, I'm going to give you the final word here. What is it going to take for Tesla to change your mind about this extreme bear case that you have on them?
So before Gordon answers or doesn't answer, do you think that he will have an answer to this question? Is there anything, literally anything, that Gordon could describe that would change his bearish stance on Tesla? Keeping in mind, this guy has been bearish on Tesla since, 2013? I recall him explaining how there was no way Tesla could scale up these laptop batteries and profitably make electric vehicles at scale. Literally, by the way, it's been now 10 years since this guy's been in the media, suggesting Tesla's overvalued, it's a garbage company, etc. 10 years. So far, in that entire decade, there's been no new information that has changed his mind. He's still bearish. This guy is a literal perma-bear. A decade of being bearish on this company. Will he have an answer? And if so, will you keep him accountable? Because I have a funny feeling the goalposts will move once again.
Yeah, I don't think it's extreme. I'm just valuing them at how the automakers are valued. But when Pierre talks about 20 million cars sold by 2030, if you look at the amount of cars that Tesla sold last quarter, to get to that number, they would literally need to build a new plant every quarter, fully sold out for the next literally 12 years. Clearly, they're not going to do that. So you can't just throw these numbers out there and just put a multiple on it and say that's what it's worth. One thing. Number two, Master Plan Part 2 in 2017. Elon Musk said he was going to build a high-density passenger transport, and he said he was going to have autonomous robo-taxis on the road by 2020.
What a surprise. Gordon has completely dodged the question. He was asked, what would it take for him to change his bearish position on Tesla? Instead of answering the question, he just pointing, hey, look, they said they do this. That wasn't a question, Gordon. The question was, what would need to happen for you to change your bearish outlook on Tesla? The way you answer a question like this is, in order for me to change my bearish outlook on Tesla, this would need to happen. This would need to happen. Of course, if Gordon were to answer the question honestly, he would be held accountable. And I don't think he wants to be held accountable. Therefore, he's not going to give anybody some fodder. Oh, yeah, here's the stuff I need to see. Because when that stuff happens, we could go, hey, Gordon, this stuff happened and you're still a bear. What happened? Much easier just to dodge the question.
They have not gotten anywhere close to achieving that plan. Elon Musk has said he was going to make ventilators. He said that he was going to have a $25,000 car. He said he had funding secured to go private. He said he was going to have 20 million robo-taxis on the road by 2020. I could go on and on.
Sure.
The point is, Elon Musk has made a ton of promises he has not delivered on. And when people say, well, he makes promises and then he delivers.
All right, Gordon.
Well, when he filed a 13G versus a 13D, when he put up the fake solar panels to justify the acquisition of Solar City, when he said he had funding secured, those weren't promises that he was going to deliver on. Those were just mistruths.
All
so
right.
to believe what Elon Musk says at this point, we think is like, believing the kid in middle school that said his dad beat Michael Jordan in basketball. I think Tesla has big problems, and I think you got to consider that.
Intellectual dishonesty at its finest. Asked a direct question, fails to answer the direct question. What's new? Now some comments from Dan Ives.
Investors were left pretty unimpressed by Elon Musk and company at its investor day yesterday afternoon. Dan Ives, Wedbush Managing Director, Senior Equity Analyst, joining us now here with more. And Dan, it was a pretty long presentation, about 4 hours. Some criticism just in the fact that we got this grand Tesla vision, but it lacked details. You don't seem to be concerned about that. Why?
I think that's always the narrative coming out of these events. I'd say the same for Apple. I think what they really did was they laid out the foundation to drive costs down 30, 40, 50%. And that's going to ultimately enable them to have a lower price vehicle, which I think is really the important thing. I ultimately viewed it as a flex the muscles moment for Tesla, but it just comes down to these events, knee-jerk sell-offs. We'd be buyers on it. That's how we've been telling our investors.
Credit where it's due. Dan Ives getting it. Long-term perspective. Understands the implications. Half-price vehicle. This is how they scale to that 20 million unit per year volume. Well done, Dan.
How essential, Dan, is that under $30,000 Tesla model for the investor story moving forward?
It's the hearts and lungs to get to mass market. In other words, when you have $60,000, $70,000 cars, okay, you could sell 2, 3 million, but you're never going to get to annual 4, 5, 10 million when you're selling at those price points. That's why sub 30K is so important, especially right now as part of this green tidal wave in terms of electric vehicles. Tesla, it's their world, everyone else is paying rent. So this is the opportunity now to put that iron fence around their install base. And that's essentially what they're doing. They're laying the groundwork. But of course, coming out of the event, investors, Wall Street, they want more meat on the bone.
Dan, I got to tell you, I love all of your one-liners. It's hard to keep up with all of them. They're the best. We talk about it all the time. But Dan, what do you make of the reaction that we're seeing in the stock today? I know you were saying you weren't too concerned about anything or maybe lack of detail that we got out of the investor event yesterday. But do you think that's just simply a result of the fact that Tesla is up so much since the start of the year?
Exactly. I'd say, and again, first off, happy birthday.
Thank
you. I would say so I think this is just a sell on the news, in terms of maybe some anticipation going into it. But if you read the tea leaves, I mean, Musk is essentially laying out that they're going to be able to lower costs 40, 50%.
I shouldn't be so impressed, but I am. Dan really gets it. Hello, half-price vehicles. Hello, half-price vehicles. Hello.
Look at this neighborhood. Look at Rivian. I mean, that's been a dog eat the homework situation every quarter. Then you look at Ford and others. I mean, it just shows Tesla's in a very, very strong position. I think that's sort of our takeaway.
We did see some actual video of the Cybertruck, although again, vague promises from Mr. Musk in terms of when we can actually expect it. How much were you moved at all by seeing the truck? And do you think, how much of this is part of your price target?
Well, I mean, that we don't really have too much factored in to our numbers. I mean, if you look at Cybertruck going in 2024, I think it's going to be revolutionary. I mean, it's our estimate you have over 1 million pre-orders. Even if you cut that by 30, 40%, this is going to be massive. I mean, I think a year from now, you're driving around Manhattan outside your studios and you see Cybertrucks. And I think this just ultimately sends that path where you're going to have Tesla expanding more and more of their model line now that they have the scale and the scope globally.
At what price point does Dan Ives buy that hideous looking vehicle?
Well, I'm on that pre-order list
myself.
So if you see a Cybertruck in New Jersey about a year from now, it could be me. But look, I'm just a believer. Again, this is people hate it, others love it. Mad Max. I just view this as sort of a revolutionary design that I think is going to, ultimately be attracted by many Tesla loyalists.
It's the cilantro of automobiles. There's no gray area.
There is certainly no
That may have
gray
been a
area.
really strange
Exactly.
comparison.
Dan, did you want to know
If
anything?
you pull up to a Costco parking lot in that a year from now, you're going to be able to put a lot of stuff in that back.
Okay, there we go. One compelling case
that's the
then to
video I
get
need,
it. I
man.
know, exactly. There we go. We're intertwining all the big stories of the day. Dan, let's talk about Succession, because lots of questions, or I think a lot of people wanted to hear a little bit more about Succession from Elon Musk. He had a number of his executives up on stage with him. How are you viewing all this talk about Succession and what Tesla might potentially look like 5, 10, 15, 20 years from now?
Look, I think Musk is CEO of Tesla at least through 2030. So, Succession, you had Tom Zhu, you had others. That was sort of a show of force, to show it's not just Musk. But ultimately, look, Musk is the hearts and lungs of Tesla. It's part of how we are where we are today in terms of what I view as, along with Apple, the most transformational company in the market. But I think this was really showing that there's not a revolving door. You have a bench, and you're starting to see that now play out. But in terms of as a CEO, I believe Musk is going to be CEO of Tesla between at least till 2030.
I tend to agree here. Remember, although if you want to be technical, he's the techno king of Tesla, formerly the CEO, but Elon Musk is likely to stick around for quite some time. After all, the robotaxi fleet is yet to deploy, the humanoid robot has yet to scale, and Tesla is yet to solve AGI. I think Elon's going to want to stick around for each of those milestones.
Are you as disappointed by what you heard as the market was?
I think there's a couple things. One, it was going to go down anyway. As you know, going into today, Tesla was up 100% from its bottom. So, there were traders and hedge funds playing the name because of this event. So it was going to go down regardless. But I do think that the investor day itself was, it was very aspirational, but it was really short on detail. And I think that's what you're seeing with today's move. And then, I'd say the third thing that was a problem, there really was no product unveil, even though there was a lot of rumors and hype that there might be a product unveil, and there was no updated financial targets. So you put those three things together, and I think that's why the stock was off, like 6% and an up 1% day.
Sorry, Kara, I was just going to jump in there because I noticed on your Twitter and other people's Twitter, you were hanging out with Ross Gerber while you were at the event. And as you know, Gary, he made an activist or a friendly activist bid, so to speak, for the board, which he dropped. His grievance was lack of succession planning, lack of other executives. Were you convinced by all of those 16 names that you heard from that there are others at that company leading the charge?
Yeah, there are a few things that I think, give Tesla some credit for what they accomplished. I think they made a convincing case. To your point, they have a pretty deep team. And, in the Q&A, I actually took a picture of this. There are 18 people all lined up in chairs in a row, Elon, of course, in the middle. And it did look like they had a pretty deep bench. So they get kudos for that. I think the second thing, they made a convincing case that they can actually drive costs down 50%. They didn't with this new, what they call Generation 3 platform. But they didn't give a time frame on that. It could be 2 years, it could be 10 years. And I think that's one of the, again, data points that would have been helpful to have.
So this is helping me to understand the Wall Street perspective a little bit better. Tesla described the how, the important part, and Wall Street is more interested in the when. And I understand that. But I would also argue it's not in Tesla's best interest to arbitrarily throw out a random timeline to be held accountable to, because they're going to get to this point as fast as they possibly can. It's entirely unpredictable about how quickly this will happen. It will take a few years. But they're building factories now. The Mexico factory most likely will be producing this next-gen vehicle. Not all the innovations in terms of manufacturing will happen on day one, but they will over time. But again, words matter. Tesla have been very clear. They are moving as fast as they possibly can. They have an intense, Zach's words, not mine, intense focus on driving costs down as much as possible, as fast as possible. These are much more important statements than Tesla throwing out some arbitrary random dates in the future. Well, on this date, we'll be able to produce a vehicle for this much. And on this date, we'll be able to produce it for this much. They have a plan, a physics-based plan to halve the cost of these vehicles. And they're working this plan literally as fast as possible. This is some big picture, very important stuff. I think a lot of Wall Street's getting far too down in the weeds.
But when's it going to happen? What year's it going to happen? What quarter can we expect these vehicles to be first delivered? We don't know.
Now, I get it. It must be frustrating if you're a Wall Street analyst. You can't stick that number in your spreadsheet because they haven't told us what numbers go in the spreadsheet. I'm sure it's frustrating as a Wall Street analyst to have to do the homework and the thinking yourself. So I get Gary's point. But Tesla's not going to start throwing out timelines for any of these things until they're announcing a product that people can order. That's the time we'll hear when the first deliveries are expected to take place, and we'll know about the exact purchase price. Call me crazy, but I think it's a lot more important to understand that Tesla has a path from today to half price, and they're going to move there as fast as possible and do whatever it takes to speed this process up, including working with suppliers, tier 1, tier 2, potentially getting into mining if they need to, and doing whatever it takes. If you've got a decade plus time horizon, you got all you need to know. But if you have a much shorter time frame, I can understand wanting a few more details.
And then I think the third thing that was very helpful is they said Cybertruck is definitely coming this year. That's a big catalyst. There's 1 million what they call pre-orders, $100 deposit. That could add 50 cents to $1 a share next year in earnings if they even got up to about 100,000 deliveries. So those three things I think were positive. But again, there really wasn't a lot of data to connect the dots, if you will.
Again, this is true, and again, this is where I think I differ dramatically to a Wall Street analyst. Apart from being much dumber than a typical Wall Street analyst, and a hell of a lot more obnoxious, I actually believe it is the responsibility of an investor to join the dots, not for the company to do the dot joining for you. They've said, here we are today. This is where we're going, and we have a clear physics-based path to get there. These are the two dots. Wall Street wanting Tesla to fill in all the blinks along the way. Allow me to join some dots for you right now. This is today. Compelling electric vehicles are available for approximately $40,000. And at that price point, these vehicles account for less than 10% market share. Why? Because not everybody can afford a $40,000 vehicle. This is dot number one. Ready? Dot number one. You guys like my dot? What a great dot. Is dot number two, a $20,000 electric vehicle at about this price point. At that price point, we are looking at approximately 70% market share of new vehicle sales. Is dot number two, a 50% decline in the price of electric vehicles between these two price points, dot number one and dot number two, means market share goes from less than 10% to over 70%. This is the most fundamental thing to understand about what we saw at Tesla's Investor Day 2023. Half price. Tesla has a clear physics-based plan to halve the price of their electric vehicles. As a result, Tesla's total addressable market will increase from less than 10% of the global automotive market to more than 70% of the global automotive market. The entire global automotive market today is about 80 million units per year. 70% of that is about 56 million units per year. Tesla has just explained how to increase their total addressable market to about 60 million annual vehicle sales. That's the market opportunity, not how many they'll sell, but that's the opportunity. How many of those they will sell, who knows? Unfortunately, Wall Street wanted Tesla to do a little dot here and here. Oh, look here, see? Once the price has come down another 7%, it'll be 18% market share. Once it's come down a little bit more, it'll be 20% market share. Once the price comes down a little bit more, it'll be 32% market share. Then 39%, then 42, then 45, then 50. Then you get the point, right? Tesla just told us where the next dot is from today's dot, but Wall Street wanted them to cover every little incremental step along the way. I still do not understand this. What part of half price does Wall Street not get?
They made the case that their volumes will go from 1.8 million this year to 20 million by 2030. And that was a big, bold assertion, but there really wasn't a lot of demand elements, by model or by segment to support that. And I think, those are the things that as an institutional investor, we just didn't see a lot of.
So Gary is right. Tesla didn't provide details on this particular model, how much demand for this model and this segment and this customer and rah, 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 rah. But once again, I don't believe this is Tesla's job. That is the job of the investor. Tesla's shown us today's dot, future dot, half price. It's not their job to fill in the blanks. Go look at the average selling price of a vehicle globally in each category and work out, half price. If it's half price, how many of those vehicles could Tesla capture? It's 3/4 of the market. If 3/4 of the people on Earth can now afford to buy this Tesla vehicle, and Tesla's told us in their master plan they're going to make a vehicle for every major form of terrestrial transport, obviously a compact's coming, probably compact SUV. I don't understand why Wall Street isn't able to do the thinking themselves. They want to be spoon-fed. I'm trying to understand. I really am. I had an interaction with Gary. I'm like, what would you need? And some people thought I was being condescending. I wasn't. I'm asking, what would Tesla have needed to provide you to fill in the dots, to provide the details that you're looking for? And I still don't have a valid answer. I shared with Gary a screenshot from my valuation model. You mean something like this, as in here's the price point and here's how many units per year it could sell for each. But Gary's response was no. I am still just confused. Okay, I do want to make sure you guys are clear. I'm not trying to be a dick. I'm actually confused. I do not understand how half price for an intelligent institutional investor and his or her team to look at average vehicle selling prices, to understand the technology, the Tesla stretch factor as well, to look at how many vehicles are sold in every single category and to do the numbers. I mean, I'm still yet to understand, what did Tesla need to provide to Wall Street? Did they need to produce a 209-page report on consumer demand by vehicle segment and do a customer benefit analysis or some other customer needs analysis? And I don't understand. I don't know if I ever will. I feel like we're speaking different languages here. And again, Gary is right. Tesla didn't provide all of these details. Instead, they provided the most important data point. This is us today. Here's 50% off in the future. We've got a physics-based plan to get there. That will help us get 20 million vehicles per year.
Gary, what about supply side? What's interesting, they're showing a deep bench in terms of executives. They're showing a deep desire to have a lot more in-house technology, particularly on their chips. Actually, we saw a big move in some of their suppliers today. Do you like that sound?
I like that they're trying to do a lot of it internally because, obviously they cut out the middleman. They're doing it themselves. We own Wolf, and Wolf, because silicon carbide, they made the point that they're going to cut that by 75%. Look, Tesla makes a lot of claims. And, one of the things that I don't know who said it, but, somebody said it last night is you can't always take their claims literally because it takes them a long time. I mean, think about Cybertruck. They announced this back 2019 and here we are 2023. It's not out. So it could or could not happen. So if I'm a supplier and, some of the suppliers got hurt today, I wouldn't get too worked up about it because a lot of times these claims don't materialize with Tesla. So to me, like Wolf, we own it. We think it's still a cheap stock, and I think it's going to be fine over time.
Do you get ultimately then frustrated with master plans, with the fact that perhaps master plan 1.0, 2.0 aren't executed, and we're already talking about 3.0?
Look, Elon is brilliant, and he's yet unpredictable. And as an investor, you don't like the unpredictability of it. And yeah, we get frustrated with it. When he bought Twitter, we were very frustrated by that because, in my experience, it's hard to, run two companies, and Elon runs 3 or 4 now. But Twitter is a whole different animal. From SpaceX and Boring, which he built from scratch, right? So it's bad enough that he's got those two, but now he's got Twitter, which is a total rebuild. And so that's frustrating. It's, it is frustrating that, he often, does a 180. I guess that's what makes him so skilled, and that's what makes him so successful. That, one of the things people tell me about is when he realizes he's wrong, he will make an immediate turn and go in the right direction. And you've seen that over and over again with Tesla. An example is they took radar out of the FSD, and I guess he realized that, high def radar actually added value. So now they're putting the high def radar back in. And I don't know if it frustrates me as investor. You get used to him because he adds a lot of value, and he's brilliant, and he adds tremendous value from a stock picking standpoint. But at times you got to be ready to tilt when he tilts.
Always great to hear the thoughts of Gary. He's really an excellent conduit between retail and institutional investors. One of the few folks from the traditional Wall Street world who I genuinely respect. He's a very smart dude. And it's very interesting because Gary's always able to share the perspective of what Wall Street is looking for, what the institutional investors are looking for, even if I personally still don't understand why they're looking for the things that they could figure out themselves. P.S. I love you, Gary. Come back to Twitter soon.
A lot of very interesting visions presented yesterday, Phil, but no timelines attached to anything.
Grand visions. Melissa, this is what happens when you hold an investor day and you give very few details with benchmarks in terms of we plan to hit this on this date at some point in the future. What they gave everybody was how they plan to disrupt the automotive industry over the next 5, 10, 15 years.
Exactly, Phil. That's exactly what they did. They just provided details of how they're going to disrupt the entire automotive industry over the next decade or so. Oh, shit.
And yes, in the grand vision sense, they gave a lot of details about what they hope to do, what they plan to do. It comes down to really 3 things. First of all, lower costs. They're going to drive them down dramatically, especially with the next generation car. Faster production, building vehicles much quicker off the assembly lines, and they plan to deliver more vehicles. Tesla is already number 1 worldwide in terms of EV sales, not just here in the United States, but worldwide. They have 17% of the market share ahead of BYD, which is primarily just sold in China and Asia, and it's just starting in Europe. And then you have Volkswagen. General Motors, by the way, a big chunk of those GM sales are lower cost EVs. They're number 4, not Ford, coming in at 7%. Then there's the Mexico Gigafactory. This was an announcement last night from Elon Musk, but no details. When's it going to be built? When will it be up and running? They do plan on building the next generation vehicle there. And again, they hope to bring the cost of those vehicles down by 50%. In terms of demand, well, Elon Musk says he sees plenty of demand in the future.
The desire for people to own a Tesla is extremely high. The limiting factor is their ability to pay for a Tesla, not do they want a Tesla. It's easy for people in this room to lose sight of that.
So what's the next vehicle that people will want from Tesla? Elon Musk believes it's the Cybertruck. It goes into production later this year. We'll see a few deliveries maybe before the end of the year, but more likely early next year, and then they start to ramp up production. Bottom line is this, Melissa. Everybody that you read these analyst notes, everybody said the same thing. Great grand vision. We agree with everything that they plan to do, but there are no benchmarks here. There was nothing where they said we plan to hit X number of vehicles by 2025, 2027, 2030, or this is what the cost will do.
The short-term nature of Wall Street again. What has Tesla told us? 20 million vehicles sold per year by 2030. How do they get there? By A, lowering the price of their vehicles, and B, making more of them. It doesn't get more fundamental and clear than this. But Wall Street isn't used to long-term goals or clarity. They want their hand held for every fucking step of the way. Draw an S-curve between 2 million and 20 million. There's your ramp. It's not going to be exact, but that's going to be pretty close. Can somebody tell me what is the job of a Wall Street analyst or an institutional investor in terms of trying to understand this stuff? Like, whose job is it to do the thinking? Is it Tesla's job or is it the analyst? What does the word analyst mean? Does that derive from analyze? Is analyzing a form of thinking? Is Tesla an analyst, or is Tesla the company? And is an analyst or is an analyst a reporter who just tells us what Tesla's told them? Do I have a fundamental misunderstanding of what an institutional investor or an analyst, their job is? Do I not understand their job? I thought their job was to think and analyze and join dots. Have I been mistaken this entire time? Is their job just to tell us what Tesla's told them? Hey Tesla, yo Tesla, how many numbers should be for this quarter? What about next quarter? What about for the full year? What number do we put in now? Oh, okay, great. Yeah, cool. What about next year? Hang on. Okay, and which product will that... Okay, yeah. What else? Okay. All right. Okay, Tesla, we just got about 300 more cells in the spreadsheet to cover. All right, next one, 2024, first quarter. Okay.
They gave a big, broad, hitting 20 million annual deliveries, but they didn't put a date on it. So these are the kind of things that I think that the public, the investors, the retail investors, I think that's what they were hoping for.
Yeah, they're also hoping for a cheaper car, and we only got sort of a tease for, when we're ready to do that, we'll probably have some sort of a product event sometime in the future, at some time not disclosed right now.
And Melissa, most believe that you're not going to see that vehicle before the end of 25 at the earliest. Yeah. I mean, if you haven't even announced it yet, a year and a half would be ridiculously fast to get it towards the beginning of 25. You're looking probably late 25, 26 at the earliest.
All right, Phil, thanks. Phil LeBeau.
You bet.
I thought was also interesting at this particular Investor Day presentation was that Elon Musk made it a point to be seated next to more than a dozen executives that we probably have never seen before, many of them, or heard of before, to get to the point that I may be running Twitter, I may be running SpaceX, but we've got a deep bench here. So this was a show. This was a show to address a lot of investor concerns.
Which is, I think, a good thing, right? And again, just for clarification, I thought you had to sell Tesla into earnings a month and a half or so ago. Stock was $155. That was incorrect. But it did trade to levels then subsequently we thought it could go to, about 220, 225, which line up with the moving averages. Now what? Well, it wasn't a particularly good day, obviously. Traded a lot of volume, did not bounce with the broader market. And oh, by the way, they said they're going to need an additional $150 billion of capital at some point. That reeks of secondary to me. I'm just throwing it out there.
So let's just discuss what we heard there. Guy on the panel sees that Tesla intends on investing maybe $150 to $175 billion in order to get to their long-term goals to transition the world to sustainable energy. They're printing $4 billion a quarter now, $16 billion a year annualized rate, and they're only just getting started. A few years from now, it's going to be $8 billion a quarter, then $12 billion a quarter, and on and on and on and on. Guy was suggesting that Tesla's going to need to go to the secondary market to raise capital to fund this growth. They will not. They're incredibly resourceful. They're incredibly capital efficient. They will deploy this capital from their own profits over time. Mark my words, unless Tesla decides to build their own gigantic robotaxi and or humanoid bot fleet, well, there's another project that we're currently unaware of. They'll never need to raise capital again. Tesla's already printing insane amounts of money, and it's just the beginning. Earlier in this very video, we heard Pierre Ferragu talk about Tesla doing $300 billion in profit in a single year toward the end of this decade. That's more than double the entire amount that they'll need to invest to reach their long-term goals. So just wanted to flag that. They are not going to need to go to capital markets to raise again.
Factories that are way down the line. We just made a whole point about how this is so off in the future and that there's no time frame. So $150 billion at some later point in time doesn't scream secondary.
Not yet, but I mean, it's out there. So where's the level? I think 165 to me is the level. If you were looking to get long, that's where you get long. If you're looking to reload, that's where you reload.
Yeah, and for clarification, after earnings, I started shorting it when it was 165 on that gap, and it was a kind of a painful position. We've talked about it a little bit, and you know, I've worked out of it and actually have a gain in the thing. I took a lot of it off today, but I still think the stock's going lower for two main reasons.
Can't wait to hear the reasons that dipshit Dan thinks Tesla stock's going lower, because spoiler alert, this guy's a perma bear. He's an emotional investor. He believes all the fake news written about Tesla and Elon Musk, gobbles up every little last Tesla Q narrative, has no idea what he's talking about, is consistently wrong, continues to embarrass himself, and I'll be stunned if he has anything reasonable to say about why Tesla stock is going lower from here. I think we're about to hear some truly embarrassing and absurd supposed reasons why Tesla's going lower that make no logical sense. I could be wrong, but given this guy's track record of embarrassing himself out loud when discussing Tesla and why the stock's going lower in the past, I've got a funny feeling we're in for some deja vu.
I look at Google Trends. You know, he talks about the desire to own, Teslas. You know what? Tesla Cybertruck, just go to Google Trends, people. It's very near, 52-week lows as far as interest in that sort of thing.
It feels a little bit unfair to be roasting and debunking some of the dumb shit this guy says. I feel like I'm punching down to a toddler, like intellectually. His reasoning. One of the reasons why Tesla stock is going lower is because apparently, according to Google Trends, search interest on Google for Cybertruck is approaching 12-month lows. I mean, that is a data point, but Dan, Tesla hasn't been speaking about the Cybertruck for years. They've relegated Cybertruck now to the more option on their website because they're selling so many of their current vehicles. Oh, and then there's the whole publicly available Tesla community created Cybertruck reservation tracker that is reverse engineered reservation numbers to be far in excess, last I checked, of over 1.5 million reservations. Which data point is more important? 1.5 million reservations for a vehicle that's going into production this year, or Google Trends search interest for the product that was announced in 2019, when you would expect peak interest would have been? I think it's a fair question. But good thing Dan has another reason why Tesla stock's going lower, because that one isn't going to cut it.
I don't really buy that. And I think the lack of kind of clarity about what the roadmap is for some of the products, the here and now. And when you think about tagging an extra $125 billion in expenses over whatever that time period is to build out to get to that 20 million car vision, let's be clear right now, the largest car maker on the planet sells less than half of that a year. Okay, so that is a really ambitious thing with nothing tied to it. The last thing I'll say, I said it last night, right now, gross margins this year, this was a margin story for the last couple years, okay? They're expected to go from 25 to 22% this year on flat to probably down earnings on 25% sales growth. So they're gonna be spending a lot. And if there is a recession, we spent a lot of time talking about it, if there is any issues with China, this company's gonna have a hard time.
Well, I'm convinced Tesla stock is definitely going lower. You heard it here first, ladies and gentlemen. Lots of great reasons there from Dan. Thorough, intellectually rigorous, sound reasoning there. He's definitely right. BRB, I'm going to sell all my Tesla stock now before it drops even lower. Quite the mixed bag in terms of reactions to Tesla's Investor Day 2023. Some comments I understand, some perspectives I understand, and some I'm still really struggling with. I feel like I'm speaking another language. Tesla describes a physics-based plan to halve the costs of the next-gen vehicle, and Wall Street gets mad because they didn't show a picture of a new vehicle. Instead, they just told us how they could halve the price of the next-gen vehicle, unlocking near infinite demand. Try as I may, I'm not sure I'll ever understand the typical institutional investor. I'm probably just not smart enough. I guess I'll just have to stick to making videos on the internet and joining dots myself with my little brain. Speaking of my tiny brain, I'll do whatever it takes to feel, perform, and think my best. And Athletic Greens AG1 is certainly one of the biggest tools in my toolkit. Most of you will know by now I've been taking this stuff for almost 2 years, has me feeling and performing my best. I can fill in nutritional gaps with 75 high quality vitamins, minerals, and whole food source nutrients. There's digestive enzymes, prebiotics, probiotics, and adaptogens. Plus, there's a 90-day money-back guarantee, which kind of makes this a no-brainer. I mean, even if you're as dumb as me, you can probably figure out there's basically no risk here. If it doesn't work, you get your money back, and if it does, you feel and perform better. Talk about a no-brainer. But you do not need to take my word for it. After all, I know some of you have severe trust issues, so instead of taking my word for it, take your word for it. Unfortunately, you are correct. I'm not sure why it's so unfortunate, but okay. AG1 improved my motivation, helps with fatigue, and makes me feel less dumb. Not my words, your words. It is almost as if I'll manage to get out of my mum's basement. Such a meta joke. Another one. On my third day since I got AG1, gotta say, I'm impressed so far. I was just watching the Tesla Investor Day and suddenly just felt the need to go get something done. I can relate. When you got more energy, you kind of need to use it. It's very motivating, at least in my experience. I had one of my most productive days in a long time. Perfect timing for me since I have a lot of stuff to do in the next month. I'll be crazy busy. But I had energy all day, didn't have a crash, and got a ton of stuff done. If this keeps up, my productivity is going to hit a new level. Well, as somebody whose productivity has continued to hit new levels for the last 2 years in a row, I can confirm this is probably what's going to happen. Long-time viewer, first-time commenter. Geez, wow. What could possibly have stimulated a very first comment on somebody who's been watching the channel for a long time? Love the channel and the Patreon. Just wanted to say, started AG1 this week and absolutely love it already. Helps me sleep deeper and, for lack of better words, really improves my gut health. And one more for good measure. I'm 1 month into taking AG1. So far, definitely noticed a difference. Not stopping anytime soon. And from somebody who's not stopping anytime soon to somebody who should be starting sometime soon, that would be you, dear viewer. Head to athleticgreens.com/SMR or click the link in the pinned comment to start your daily health habit now, and you'll soon be feeling and performing your best. Plus, if you use the link in the pinned comment or head to athleticgreens.com/SMR, you get a 1 year free supply of vitamin D3 and K2. 90-day money-back guarantee, nothing to lose, plenty to gain. Now's the time. And if anyone saw yesterday's video, my offer to the Wall Street analysts, unfortunately, I still have yet to receive a single DM. And I guess that means that they're going to continue to want Tesla to join every single last dot for them. A bit of a shame. So use the link in the pinned comment, grab your Athletic Greens AG1, and don't forget, submissions are now open for the latest Patreon exclusive Q&A. Get your questions in now because submissions will be closing very soon. See you over on Patreon. Love ya.